It's that time again to have a quick look at how the portfolio is going. I've seen a little bit of red and a little bit of green over the last month. So let's jump in and have a look and see how things are doing on Trading 212. It has been down, as you can see on the chart here. But what do I have in there? I have £40,060, of which I have some reserved for orders and some free cash still in there. And some of that is just some of the dividends that have been coming in over the last few days. I am doing reasonably well on my ISA this year. I have about 70% used up, and actually I have quite a bit of that sat in the cash ISA. Trading 212 is really knocking it out of the park with all of the new offers that they are bringing in. So what all do they have? They've got the invest account, which I recommend you don't use unless you've managed to max out your stocks and shares ISA. There are CFDs in there. I stay away from those. I've been burnt in the past, but we do have the cash ISA is now working currently on this 5.2% APY, and as you can see, £1.44 coming in every single day of the week. If you don't actually have a Trading 212 account, why don't you have a look down below where I will drop a link where you can go sign up and invest £1 at time of recording. You will get a share of worth up to £100. Just remember, any capital you put in there is at risk. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking Fi. Anglo American is up almost 14% over the last month. It has done a bit of a tank, and this is because of all of the excitement coming in that the Australian mining company BHP was trying to do a takeover deal, and that deal wasn't successful. But keep your eyes peeled. There may still be further attempts by BHP to buy them out in the next 6 months or so. I do hold 30 shares of Anglo American, and its dividend yield has been cut quite drastically, but these are very cyclical companies, the miners, and they go up and down depending on how much money they are actually making, and this at the moment a 3.15% dividend yield. I own about 0.7% of a share in SML, up 13% at the moment, and that dividend yield is not going to make me a millionaire on, but paying 0.62, but that is not why I'm investing into SML. It is one of those companies that basically feed the whole tech side of things. I am looking for the growth in this company over time. British American Tobacco, this just keeps bouncing all over the place. This is one of the largest dividend yields that I have within this portfolio. Currently paying me a 9.81% dividend yield. I may start to buy a little bit more into here and add to the 60 shares that I already have. DS Smith, this is down over the last month. I hold a very small holding in this, but there are talks around potential mergers in the offing with DS Smith, so one to potentially keep an eye on and have a look and see what happens there. This is paying a dividend yield of 5.13%. Evolution Gaming, the online gaming company, down particularly badly over the last month, down almost 11%. I might add a little bit more to this because it really does have a huge proportion of that online gaming community, and I think there is potential growth within the company moving forwards. Pays a reasonable dividend yield in around that 3%, but I'm buying this to look at the growth within this company, which I think there will be. There are obviously some risks out there where you might have legislation and statutory requirements coming in that potentially do hold back some of the growth within the company. Glencore, the miner, over the last month down 6.8%. Overall, 110 shares in Glen sat there almost up 2%. And as you can see, yet another miner that has cut its dividend yield down to 2.24%. And I suppose this brings into that high yield dividends may be a bit of a trap. I was aware that buying into miners was going to be very cyclical. UKW also down about 6.6% over the month. hold 1,000 shares in this, and I think I am actually going to start adding a little bit more to this. The company moves up and down in share price, but it is paying a 7.73% yield, and this investment trust has set a target to match inflation for its dividend growth over time. GSK did have a lawsuit coming. It has seen a drop over the last month of about 11.5%. That said, still up 19% on this holding for the 40 shares that I have, and paying a 3.66% yield. Potentially an opportunity to start to buy somewhere in around the mid 52 week range. IG Group is just sort of bouncing around, remaining quite level over the last month. Currently holding 86 shares of this. It is up 21.5% and still paying a nice little tidy dividend yield of 5.68%. Intermediate Capital Group did go up earlier on in the month, but has dropped off over the last few days. Looking at 20 shares held within this portfolio and up almost 71%. This is one of the best performing stocks that I do have within this portfolio, and I'm raging. I had several limit buy orders that just didn't quite trigger, that would have given me about 50 shares worth of this company. It has just gone ex-dividend on the 13th of June and paying a dividend yield of 3.6%, and that equates to 53 pence per share held. I'm not going to talk about all of the ETFs that I hold within the Trading 212 portfolio. Some of you will know that I have a few different pies within here that all hold ETFs. I have that monthly DCA, the Own the World, and the £10 challenge. If you want to, I've done a couple of videos on that comparison between dollar cost averaging or lump summing, and I've also done a video on that £10 a day challenge, looking at where I was 9 months into it. If you're getting any value out of this kind of content, I would love it if you could smash the like button and think of subscribing. And why don't you drop me a comment down below if there is content or some ETFs or stocks that you might want me to go and have a quick look at. Legal & General over the last week or so, down about 11%. I know a lot of people within the Trading 212 community did buy that dip. I also added a few more shares to my holding, bought in another 75, and I am currently looking at 925 shares within my Legal & General holdings, and I think everybody was very happy with the big payouts that they got. I got about £125 in dividends earlier on in the month. It is still paying that nice little dividend of 8.85. Lloyds haven't really been paying much attention to this. It's sort of in around a break even this month, holding 1,100 shares of this and up about 25%. It's probably up too much at the moment for me to think of buying any more into this bank, but it's paying a 5.09% yield. Now, National Grid is probably one of those stocks that I've been paying most attention to over the last few weeks. It had a rights issue where it was basically doing 7 shares for every 24 that shareholders held, and they landed in my Trading 212 account very recently. Got an extra 32 shares for everything that I held within here. Just under 200 shares now held. I'm probably going to keep buying into this while it sits at this low price. The whole idea behind the rights issue was to try and raise about £7 billion so that National Grid could go and upgrade the infrastructure in the UK, and I believe a little bit in the US as well. It is paying a 6.53% yield. When this final dividend lands in the next few weeks, that will be my holdings within National Grid. Pfizer's been all over the place. There are hopes that some of their phase 3 trials that are going on are going to get patented, and that could see a big jump in the share price. I've just been buying in a little bit into Pfizer over the period, just over 20 shares of Pfizer being held. It does pay a nice little 6.0% yield. Primary health properties, it is down about 6%, just under my average price for the 1,700 shares that I'm holding. Pays a dividend of 6.73, and I think for this quarterly payer, I might start to trickle in some of those dividends that I'm going to be getting coming towards the end of the month when all of my ETFs start to pay out. Realty income jumping about all over the place at the moment. I now hold just over 170 shares, just under the break even on realty income. The FX impact is sort of hitting me a little bit on this, but it is paying in around that 6% dividend yield. I don't know if I'm going to add any more to realty income. That is paying me normally about £28 per month. I am probably going to look at reinvesting that into something else, possibly Agree Realty, but I'm not 100% sure. What I might do is take that and just put it into primary health properties. Next, we've got the Renewable Infrastructure Group, Trig, and this was my worst performing stock until it took a bit of a jump at the end of last week. I hold about 1,150 shares in it. I am still down 11%, but it's still paying a nice little dividend of 7.42%. And actually, it's quite good when I look at the UKW and Trig. They pay out in different months, so I get a nice renewable energy payment 8 months out of the 12 of the year. Rightmove up about 1.8% in the portfolio. I do have a limit order in there. We will wait and see whether that ever triggers. It is a little bit higher than that by about 50p and paying a small dividend of 1.69%. Rio Tinto, my last miner that I hold, that is up about 7% unlike the others, and they haven't drastically cut their dividend yield. It is still sat at 6.52%. Rolls-Royce, my best performing stock within my portfolio, for the 100 shares that I have, that is up 105%. It doesn't pay a dividend at the moment, but who knows, in the future we might see that come back. Taylor Wimpey been doing reasonably well. It's up 38.62% within the portfolio and still paying a nice tidy dividend of 6.29. Let's wait and see what happens with the house builders if there is a new administration comes in. I think having a quick flick through the Labour manifesto, they were looking at building a lot more new houses at affordable prices, so that might be something that helps out companies like Taylor Wimpey. And my worst performing stock, at one stage we ended up with Vodafone, had managed to break even. We then went into the ex-dividend date, which created a bit of a drop in the share price, and it's just continued to go down. This is the worst performing one at 11.25% down, but still paying that 11.05% dividend yield. And remember, they cut that drastically, so I think it's going to go down to somewhere around the 5% mark. I am planning on selling out of this. I will take the dividend, see whether or not there is any bounce back from that price that we can see we're sat at the moment. Take that out and reinvest it into something else, potentially something like PHP. Wonder what you are thinking of investing into. Why don't you go and have a look at these ETFs and see whether or not any of those actually fit your investing strategy. Thanks very much for watching. I will see you in the next one. Cheers. Bye.